Now, I mean, so here, this is a 1 minute. Now, the thing with market structure that just is kind of a baseline review. I think the biggest mistake that I see people making, I've made this mistake here. It's very easy to do because we look here and we see like, well, I've got all the information I need here. Why do I need to look at anything else? Well, we're looking at a 1 minute chart, and this would be consistent with you. Certainly, there's no shortage of people that want to teach market structure or ICT concepts. I mean, we certainly can respect the fact that the guy's been hugely influential in the TA community. Um, Love him, hate him, almost doesn't matter, right? He's been massively influential. Doesn't matter that he borrowed 85% of it from Wyckoff, but it dominates, right, in TA, right? So if you went to YouTube and said, well, show me how to trade the MNQ, right? You're going to get 20,000 ICT videos. The point that's kind of beside the point, right? But he certainly uh, brought new language into the TA community. So as we look at basic things like a shift in market structure, change of character, again, those all came from Wyckoff, but ICT popularized them. Um, as we look at something like this, the advantage I think of market structure is that you're literally getting a playbook. But back to my point earlier, we're looking at a 1 minute here, and it's really important that you try to make an effort to get in alignment with at least one time frame higher. So probably the easier way to do this is let's bring them side by side here. So if you're on a 1 minute, now some people would tell you go to the 1 hour. 15 seems to be a good starting point. Although I will consistently reference a 1 hour and a 4 hour as well, even the daily, just looking for bias. Now, I see that's the thing I was trying to reference earlier. It's really easy to get caught up in the 1 minute and lose track of what's happening on a higher time frame. So as we look here, if you were looking at just at the 1 minute, well, what do we see? We see trend is up, right? With last major event here of any significance was this structure break, shift in market structure, right? So swing, retrace. And that is the foundation of not only anything that I or Irwin would teach you is just that's all the market can do, right? It's all it's capable of doing. Everything in the market is this, right? That's everything. That's all you're looking for, and that is the foundation of market structure. So we get let's get an arrow here. We get a break of structure here, and then we anticipate, right? There's no knowing. We anticipate with that break of structure, there's going to be a retrace. We have now, right? Again, just doing basics, right? So we have money was committed here, right? That had to be aggressive to create the break of structure. So it's just a process of now looking for this next retracement. Now, do we continue in the trend? Now, so if you're doing that on the 1 minute, right, you want to make sure that you're not trading opposite to the higher time frame. So as we look here, we go, oh, okay, well, swing break of structure, good, right? So what are we anticipating? Now the retrace, we're moving higher. Well, so we're in an uptrend here on the 1 minute, but we're in a downtrend on the 15 minute. So you have you're not in alignment. Downtrend, uptrend. What to do? Well, one choice is not trade until they get into alignment. Meaning you're going to, so you're always going to defer to the higher time frame. This has to sweep that high to get into an uptrend. And I think that, and I've made this mistake myself many times, right? That it's you get sucked into the lower time frame, what's happening down here, and you lose track of what's happening on the higher time frame. So right now, I don't want to be looking for longs, even though it's showing me that on the 1 minute. I want to be looking for shorts on the 1 minute until this changes. And that's a hurdle that takes some getting used to because it's so tempting to say, look over here, look, I could have scalped right from 20 to 80. There was a scalp there. But over time, that will work against you. If you wait until they're in alignment, you will, I think, find your results will be much better and there'll be less stress in the trading, which is just part of it, right? So this needs to get up here and reconfirm, right, and break the strong high, right, because that's what led to the breaks of structure down here. So this has to happen. Now, once that happens, this is the big advantage, in my opinion, to what market structure offers to you as a trader because I'm getting a playbook right now. We haven't broken it yet, but if I break here, then I know, well, know is the wrong word. I'm free to anticipate that if this breaks, I'm looking for a retrace because the market has to come back and get liquidity. So while there are targets up here for potential liquidity, to make the assumption that we're going to just do no, come here. We're just going to go straight up here to get all that liquidity. Possible? Yeah, of course, anything's possible. But what's more probable is that we would do something like this and then retrace and then we would go up for it, right? So in my mind's eye, everything in the market revolves around that. That's it. So what do I have here? Well, I have the conditions for that to be at play here, possibly, right? Do I have this possibility here? I do, right? But it's not there until we break this high. So if you're sitting over here going, oh man, I'm anxious to get long, right? Because I can see well, there's right. You got to be careful about that because until it breaks, you are still right. We could just be sweeping this high right here before we head down again. Now today's a kind of a difficult day because we have a lot of hesitation in the market and nobody's going to want to commit hugely, right? I mean, algos are going to do what they're going to do, but no one's going to want to commit hugely until we get through the Fed and the massive earnings coming out later today. So this is kind of a tricky day, but the fact that it's moving slowly kind of helps us, right? So I can look here and go, boy, that sure looks like, right? I mean, again, that is the dominant algo of the market, right? You can fight it, you can fight me on that all you want. I'll give you 5,000 examples, right? It's all the market does, right? There it is, right to the tick. Where's our target? So you now again, I didn't pre-plan this. Here, this is what the market does, right? Now that would give me a break of structure where I can now I'm not saying it can't do this, but what I can anticipate now, if I get a break of structure, that would be the set up the potential. Maybe we go up into some of this imbalance here. We've got, probably call that an order block here. We get up into some of that. Now the market wants to come back down, right? And then right, that now we're getting closer to this, right? Where do we have continuation? Now there is no guarantee that we continue. So we could potentially have a deep retracement here. The other variable here that you want to keep in mind is premium and discount, right? Again, that's right from, that's ICT has made that, pretty much essential viewing, right? So if we're here, if we look at it this way, if we do something like this, well, we want to start looking at the halfway point, at least the 50% retracement, which is just another variation. It's the same. We're just doing the same thing again, right? Here's the swing low. Here's the swing high. Now we're looking for another measured move, right? That's all we do over and over and over again, right? It just at varying degrees. So we have a target here. We have resistance, right? Because we know that that it's not going to just easily get there because you've got an order block sitting here, right? There it is, right? So you've got an order block and a fair value gap. How do we know it's a good one? Because we got a fair value gap that came after it. So this is resistance that's not insignificant. You can't just go, well, I can see where they're going. They're going to get that because this money was committed to create all this break of structure. So there's going to be defense here. If we come up here to the 15-minute, there's going to be the people that shorted here are going to defend, right?
Can
If
I
it
ask a
breaks,
question, Sam?
oh, we got a question. Go ahead.
No, it's a question for me because you
Oh,
know much more about market structure than I do. But as you know, the markets are fractal, right? It swings within
mhm.
swings within swings. How do you deal with this? Because you get bosses and shocks on all kinds of levels.
Well, so you talking about some of the internal little market structure shifts that we're getting here? These?
Yeah, for example, yeah. Yeah.
Well, these are like mile markers, right? So that's how I always think of them. This is kind of teeing me up because we have the majors, right? We have the strong high and the weak low, right? So that's framed the market for us. But along the way, we get little micro tells as to what the market is doing here. So this little micro shift down here it's well, let's see. Let's do it this way. So look here. I get swing, retrace. Now it holds above the low. There's the pattern right there. Now again, right? I mean, this is your mind's eye, right? Should always be here. Swing, retrace. Now I break, right? So I'm getting it again, right? This is just over and over and over again. So if I'm coming here now, if I think we're going, so here's the strong high. So I know right now the trend is still down. So if I'm breaking this structure here, right, I've had a little micro shift in the structure, because this is all straight down. We pivot at the golden zone, then we're coming back up. So it's the same idea. This is a shift in market structure, on the smaller time frame, an internal market shift. So what do we anticipate after seeing that? We're anticipating the retrace. There it is, right? So as every time we do one of these, and of course we're always conscious of where's the liquidity, because that's what the algos are doing. That's all they care about, right? Is where's the liquidity. So if I sweep this here, and then I can see that there's liquidity sitting right up here, right? That would be the next logical target for the market to go get, right? Because the algos are after liquidity. You can see it up here, right? It's sitting right there. They don't get it. So this is that's perfectly ripe. Here's the market structure shift. I'm anticipating the retrace. On the retrace, if I do it, maybe I do it this way, make it easier for you. If I do it from this low to this high, right? I want to see at least 50%. Do I have a target? Yeah, I got a target. Did I come back to the 50%? Yes, right. And I can come back here where there was this little stall here. And what else do I have in here, right? I've got a fair value gap, right? Which now Erwin and I go back and forth on these. They're all over the place, right? So it's one other technical component you can consider, but it gives us some insight into where the aggression is, because to create the fair value gap, right, on the way up, buyers had to overwhelm sellers, right? So to where we couldn't get fair value there, indeed, right? So we get a fair value gap, right? As it comes up often, right? Not always, right? But that's a place you can look for. So you get a nice combination here. And it's a little trickier on the 15-minute, but I get the combination of the market coming back to fill in the imbalance here, right? Fill the fair value gap as it ticks the 50% retracement. So you literally have textbook market structure happening here. Now, what makes this hard on the 15-minute is just, well, so what am I doing? Am I buying a limit order here? Am I buying at the market? It's a little trickier here because that's the benefit of having a smaller time frame over here, because you can see it right here. And what makes this even better, right? So again, remember, we're always kind of looking for liquidity. Where's the liquidity? You can see that they swept the low of that prior candle, and then they go. You can see it right here. You see that little they sweep the low. That's often like that's go time. If you see that the low sweep and then look how quick, off we go, and then we create another fair value gap, right? So right, okay, buyers have responded here.
Okay.
I mean, I couldn't script anything better. So it's the combination of the little market structure shift. We go up. Now we're anticipating the grab of liquidity and the retrace. Right back to the retrace. Now, do we get that target? Well, remains to be seen. It's going to have to break the strong high to get that target. If it gets that target, well, then it's all the same thing all over again. Now we're waiting for the retrace. Where do we want the retrace? 50% of the last swing. Can we get that? Well, then does it continue? So these are little signposts along the way saying, okay, something has shifted here, because I had the little swing here. You might have been thinking, oh, well, hey, well, I got a little swing here. Well, here's the low as we come back down. I've broken that low. Well, are things changing? That's not broken at that time. So all I see here is here's the pivot, here's the swing. Now I'm breaking again on this direction. Okay, well now what am I waiting for? Well, if the market comes back this direction, I'm anticipating we have the potential for a retrace. I'm breaking again. So it's kind of keeping you out of trades, or keeping you from taking any substantial losses. Well, let's get all this out of here. If you were taking, come here, any of this, if this is, see, now your bias would be here. You'd be in sync with the higher time frame. Remember, the trend is down. So if we get this move as the market's coming back here, you're looking for the short. Do I get it? Do I get anything here? I get the opposite, right? So now I'm breaking higher. So even if you took it here with anticipation of that, your stop is pretty tight, right? So you're going to take a loser there, because you were trying to trade with the direction of the higher time frame. Doesn't happen, right? So now we get the little shift here. Oh, something has changed. Now I'm looking for the next retrace. Now, do I go all the way up here? Little mile markers along the way. And then we can look for them in conjunction with what's happening down here because I'm getting little micro shifts on the 1 minute as well. Now these are much less significant to me than these are, right? So you want to have you really need to have a side by side for these to see what's happening here, but always defer to the higher time frame. We are still in a downtrend. Still. Even though boy that sure looks like I want to buy it, still in a downtrend. So you either your choices here. I continue to look for shorts because I'm tied to what the higher time frame is doing, or I don't trade until I see a break of the strong high. And that's the that's what kills more traders than anything. I think Irwin would agree with this, is too many trades.
Yeah, exactly. And I think that's one of the biggest problems people face is that they don't are they're probably not able to distinguish where locations are where you should look for trades and which locations you should skip and wait until something better occurs. So
Exactly right. Right. It's the
can
patience,
you can
right?
you can you give
It
maybe some clear indications or setups how you are using the market structure to find those locations where you are interested in taking a trade? Because if you're already filtering out all the locations where you're not interested in trades, then you're already skipping a lot of losing trades.
I mean, I've been showing this for I mean, how many years? 8 years, right? Golden
Fair
zone,
value.
golden zone, golden zone, golden zone. It's all it does over and over and over again, right?
That's
So
the
when you
fair
when you
value.
come to
Yeah.
something like this, when you come to this, right? So this is well, wait a minute. I'm in a downtrend. So you got to make a decision. Do you want to take this trade or not? Right? I mean, it's counter trend. Winner. Where does it go to the next golden zone, right? It's just oh, that's what it does, right? I can show you till there's no limit, there's no market where I can't show you that over and over and over again. It's what it does. Um, so if I'm looking here, w do I want to buy it here, or do I want to wait and look for an opportunity? Now, anytime you're selling, it's the exact same idea. If we right now come here. The question is, am I going to get a higher high here? Because I've come right up here to this liquidity and I didn't get it, right? They swept here, right? There's the liquidity sweep. Now I haven't done it yet here, but you can anticipate because the market will move from internal to external liquidity. So where's the closest liquidity that it can go to, right? Where would your bias right now? You reasonable to anticipate we're going to go for this liquidity. That seems like a logical place. Okay, it's sitting right there. It didn't sweep it there, right? That's could be because of the day, right? So the market's moving really just slowly. It was rambling around, right? It's just algos competing with each other's here. But if you were anticipating this break, well, now the next question you have is, am I going to break the strong high? Because that changes the trend. Right now, we're still down. You need to keep anchored to where the trend is. You're on the wrong side of it, and you can still there'll be scalps, and there'll be. I'm not saying you can't make some money being counter trend, but if your goal is to be looking for 1R, 3R, those kind of even more than that, you need to stay in sync with the higher time frame. You just do, right? I mean, was there a trade here? Yeah. Was there a scalp there? Yeah. But if your goal is to be mechanical in your approach, something that you can repeat, that's not, well, it felt like it was going to go higher. Well, you're just kind of winging it throughout the course of the day. This is very clearly telling you that right now I'm only looking for shorts until this high is broken. Now that's a restriction on traders that most traders don't like. They don't like being forced by that, but that's the bitch of it. That's the thing you're wrestling with. You're wrestling with yourself. You've got the indicator, the market structure, not the indicator. The indicator is showing you what the market structure is. The trend is down. So why are you fighting it?
I
Now,
guess
if you're
this is
doing,
because Sam, sorry, but I guess
wait, say,
if you look at this downtrend, I mean it started a couple of days ago, right?
Hmm.
Um, so if you are only looking for short and today is a day where we only get the retracements going up, that would mean that there are no trades today.
Yeah, which is a very reasonable conclusion to make on a Fed day.
Yeah, yeah,
I
yeah.
mean,
But I think that's probably one of the problems people face. They want to open a trade today because you know how life goes. I mean, they have like two
yeah.
hours now, and during those 2 hours, they want to make their money. But the market doesn't care about you and your time schedule and
How
the fact.
many places here can I show you this on the 15 minute?
So I
Right.
think it's
Right. I
reasonable
mean,
to say that if there is no setup, there is no setup, and you shouldn't force yourself into trying to counter trade with against the market structure. Do you agree?
that's right. Oh, completely. That's the right way to think of it. Which and it's that's what so many people struggle with because they're like, well, shit, man, I got 2 hours to trade. I want to trade. I want to trade. Well, sometimes
Exactly. Yeah.
it's just not there, right? I mean, as you were saying, right? Oh, I got 2 hours. I can trade before I have to go to work or do so, whatever the case may be. And you see here and you go, well, the 15-minute trend is down, but I want to be a buyer today. Well, okay, you're winging it is what you're doing. You're not trading something that's repeatable that you can explain to someone else. You're just going, well, I kind of wait and instinctively I kind of see stuff here. If we look right here now, I've had look here. I get a little market structure shift, micro shift here. I get one here. I get one here. I get one here. We're all over the place, right? These little micro shifts on the 15, right? There's no really clear established trend. Now, the only other thing that I might bring into this here is as we see the market, right? Look what happened, right? We left this hanging up here. This gets swept. This does not get swept. So where is the next possible liquidity they might go after, right? They being out, the algos that are just written to go for liquidity. Well, that's sitting right there. Where are they going to go? If they don't, this is shocking that they don't get that. But that's a tell, right? That's left up there. So either we're going to, well, you know what I'm going to do here, right? Either we're going to do this, right? Look, again, it's just how many do you need to see in a row before you start paying attention? This one, this one, this one. Now, if it breaks, okay, well, next target's down here. You always want to be thinking, well, what are they going for, right? That's all the algos do is they look what's the purpose of the market, right? To provide liquidity for traders. That's all the algos are doing, right? Where's the liquidity? Well, the next one's right here. I got here and I got here. Trend is down. So immediately, your first thought is, oh, I want the long. Do you? That's counter trend. Now you may want the scalp there. Maybe you get a scalp out of that. But if it breaks, then see if it breaks and you take the loser there. Then what do next? You go, oh man, I'm such an ass. Why am I doing that? It's literally screaming at me. The trend is down. Now you get into the shit. Self-flogging comes in. I'm such a dumbass. Why did I? It's right in your face. Trend is down. Why are you longing? So where's the opportunity for the short? Is there an opportunity for a short? I mean, where's the range that we're in, right? Sometimes it's easier to do it this way. Right now, we're in this range, right? So here's the 50, here's the golden zone, here's the 786, right? So you've got all of that. What do you want to be doing here? Remember, all we're ever looking for is this. I want the retrace. I want that. That's all you're ever looking for, right? In your mind's eye. That should be the only thing where I can just show it to you over and over and over again. It's the same thing, right? Same thing. This, am I getting this? If not, I'm looking for this. And I talked about this a lot last week with the footprint. It's not the first move you want. You're chasing if you don't want the first move. Here, I mean, this is a decent example. You go, oh, if I just shorted it here. Yeah, but it's easy after the fact. You don't want the first swing. You want the retrace that goes after the low. saying you always it's never the first swing. The first swing is just alerting you, hey, whoa, shit, maybe I got a market structure shift here. Maybe I can get in line with the higher degree trend. Oh, come here, right? So, oh, market
Good
structure shift.
question. I think,
Here's the shift. Here's the retrace that does not get to that high, so it stays as an internal retracement. Now, if you're selling here, you're in line with the higher time frame. There's the trade.
so Sam, am I correct that you would look at the 15-minute in this case to see that, okay, there is downtrend.
Hmm.
And then, for example, if you go to that retracement at 10 o'clock on 20 April, you switch to the 1 minute
Oh shit.
to find an entry.
You tell me that again. I lost track of where you were.
Okay, on the 15-minute,
Yeah.
you can see that retracement around 10 o'clock on the day before. The day before, yeah.
Oh,
So
this one.
yeah, so you can clearly see that downtrend and then the retracement. How would you then find an entry for that retracement?
I
What would
think.
be the process you would be looking for? And how would
Okay,
you
let's
use
let's do it.
the
I think that'll show up.
yeah, how would you use the market structure indicator to find the entry for this?
Let's do all charts.
Yeah,
Okay.
there it is. It's wide at the open.
Okay, right. So this is actually a great example. Right, great example, right? So that's right at the open yesterday. So let me push this out of here.
Yeah, so the higher time frame already says that the trend is down.
All right. So we got a couple of things we can lean on here, right? So we have imbalance here where we have that to lean into, which means, right? So whenever there's a fair value gap like this, you want to be looking for, is there an order block right above it, which there is, right? So this produces that. So
And
if
just sorry to interrupt you, but the indicator can show these, right? Those fair
yeah,
values
yeah,
and order
yes,
blocks.
yes, you can. I'm just drawing them in because
Yeah,
I think I have only like five. I have a limit of five fair value gaps,
yeah.
so it will only
Yeah, but
show so many.
just so that people know that the indicator can draw them for
Yeah.
you.
Oh, yeah. I could have it show. How many do I have here? Showing seven, but there's more than seven to the right of the market.
Yeah,
So
yeah,
back
yeah,
here, it's not showing. So if I change that to show all, right, then it's going to show you all of them.
yeah.
Now, so here, this is tricky. Now, remember, I mean, this is almost an unfair example because it's the opening range breakout has become the most popular retail trade, period, amongst futures traders. Again, you go to YouTube, 5,000 videos on the opening range breakout, the 15-minute breakout. Well, of course, the algos know this. They're the people who, well, I should say the people that write the algos know that. Oh shit, where did we go? Shit, I hit the wrong button. Here we go. They know this. Right. So who's there's retail buying it, right? Because they've said, yeah, I saw on YouTube that buying that opening range breakout, that's the way to make nothing but money. Well, well, boom. Same thing here, right? It's just like it's just well, that's the Madonna trade. It's the same thing, right? Algos pay attention to what retail's trading, right? Or I should say the people that write the algos. So as we look here, well, first thing, right? So here's the 15-minute. That's a liquidity sweep, right? So now you don't know, right? It's always a little easier in hindsight. But the fact that this doesn't accelerate here, and if you're looking at a footprint chart, you're likely going to get some indication here that you had a delta swap here. Now, here's the trade, right? So this doesn't necessarily mean that I short it right here. Although if you're good with footprint and you know how to scalp, that's not a bad trade. This is I call this the break and enter, right? I've done several videos on this. So here's the pivot, right? We go up, we break this pivot, right? So that is a market structure shift. God, I think it's actually there. Yeah, it is, right? So here's a shift in market structure. What do we anticipate after that? Always, always, always 100% of the time. When I see a shift in market structure, I'm anticipating the retrace. Not that I know, I'm anticipating it. Well, the key to the anticipation is that it stays above the swing pivot here that broke that created the market structure shift. When it breaks this, that is significant. That's the change of character. And that doesn't mean you enter here and chase it. What it means is you're looking for the retrace that stays inside, that stays internal here. So same idea, right? I would take the the fibs would actually be there from the indicator, but I'll just draw them here. Now this is fairly deep. So you see we go to the golden zone, we get the reaction because there's almost always going to be a reaction there because an algo is sitting there. But so what's important to me is here. Now you got to size this accordingly. If you're going to take this the right way, your stop has to be on the other side of that pivot because that's well, in that case that was the high that mattered. So when we come back here, note the way it does it. Again, this should always be in your mind's eye, right? It does it in a three. So when we start to come back this direction, here's the first thing that happens. I get a little micro shift here. Here's the retrace. There is the ideal
Exactly.
trade right
Yeah.
there.
Yeah. I agree.
Right? I mean, that's the spot that you get to take. Now, again, it's a little, it's, I'm doing this in hindsight. When you're looking at it, it's constantly a series of threes. The most important thing to that setup was this right here. That tells me that this is now the swing that I'm trading. Here's the key pivot. Here's the range that I'm in. Now the other thing that I would do here, if this is me, and I know Erwin would do the same, I'd be drawing that, looking for do I have some can I see some trap traders here? Do I have a low volume node here? This is a little bit counter to what you might anticipate because I'm getting another little micro shift here. So that would have you pause, right? So, oh, wait a second. Oh, shit, I miss that thing all the time. If I come up here and I retrace, right? So at this point here, you'd be anticipating this. You'd be anticipating because we've had the change in character here. Here's the retrace. You're anticipating this. Well, if you're short off of anything in here, your stop's got to be relatively tight. So when it comes back this direction, that would give me pause. Well, no, I'm not sure. Okay, well, that's a little micro shift here. Is the market heading? Are we going to about to do this? Don't know. But when I get another little shift here, immediately, what's my first thought? Oh, I'm looking for the retrace. There it is again. If I get that right on there, right? Wick got through here,
Yeah, and
but
this is
that's
of
just
course where the higher time frame comes in play, right? You have
right. Exactly. There's the trade right there. If I can get that off.
yeah,
Now let's look at
you're
that.
not looking
Oh,
for
over
longs here.
here.
You're looking for shorts.
Right.
So
Because
you might get stopped out maybe on that first
oh yeah. Oh yeah.
retracement,
I mean,
but then the second
but
one pays off.
right, and the stop that you're going to take is going to be much smaller because you're trading into tight range there. But
Yeah,
the key to it is you're only looking for shorts here. This is the little bit of a hesitation. Oh, whoa, okay. I got to wait because now I got to wait for the little shift that happens right here. Okay, well now we're back in alignment here. So what am I looking for? The retrace. Do I get it? Here, it's the retrace, right? That's where all that's happening. I get the
yeah,
retrace. Now I can go. If I took a stop here, it was small. All of that happened right in this range here.
hello.
So let's just carry that forward, right? Because it's this is what makes it duplicatable and systematic. So now I get a major structure shift right here. So I had the little micro shifts in here. Now I get major.
But one,
Right?
unless you want to get a spare. You need to mute somebody.
Yeah, who's that?
I don't know.
Let me mute. I think I got it. Okay. Right. So now we want to be very dialed in to what's happening on the higher time frame. Right? So this is all of this is happening right into this. Now I get this major structure shift. Let me put this over here where we're going to see
But
that.
but this is pretty powerful if you think of it.
Okay. So there's the structure shift. Now remember, right? This it should be like immediately. The first thing I'm thinking, oh shit, man, I'm looking for the retrace. Now this goes down here. We do break the IB. Here's the kickback. So let's see if I might have a 50 there. Remember the software is always going to draw the fibs, right? So here's the swing. Right now, I'm waiting for a retrace. Now I know 50 or golden zone is prime zone here. do you see how precise these are? Here's the swing, right? Oh, but now I'm waiting for the retrace. 50 to the tick. Where do we want to start looking for the trade between the 50 and, you'd go up to the 7/8. Oh shit. You'd go up to the 7/86. Anywhere in this range, because this is well, this point here, that's the strong high that led to the swing. This does nothing. It doesn't break anything. So all we're doing is now confirming the downtrend. So now as we're doing this, we're confirming. Let's see, that's going to pull it. There we go. Right. So if I look at it over here, this is the little swing. Now I look here, and what do I see? Do you see what happens right here? The little liquidity sweep there off of the high. No, that's that right there. But the trade that you're in here off of this 50 is this. Now, what happens is just, again, I would like, we can't make this up. So what do we get here? Break of structure, right? Here's the target. Looks like it's a front run. What am I anticipating now? Retrace. Now, this would give you some pause because I get a change of character here. So this would if I thought, oh, wait a minute, now we going bullish again. Well, wait a second, what's the trend? What's the higher time frame? I'm still only looking for shorts. Do I want to take the buy? Because you might think, right, if you're just looking at the 1 minute, you're thinking, oh, I see it. That's what's happening. Nope, we're only looking for shorts. Only looking for shorts. If you could make that transition alone, your trade success rate's going to quadruple. What is the 15? If you're trading on the 1 minute, what's the 15 telling me? Are you going to miss trades? You're like, oh shit, look how perfect that long. Yes, but over time, that discipline will save you, right? It will. So if we look here, at what point do we get a shift? Well, now yesterday, this is kind of pretty typical, right? You watch the markets long enough, right? We stay in this range here underneath the IB, right? And we go nowhere essentially, right? That's just all the accumulation, right? That's what sets up the ramp towards the end of the day. This is very, very common. We've all seen this many, many times, right? You stay under the IB. We're not trending. We're just accumulating. Now, all of a sudden, right? Break of structure, retrace, break of structure. Now look at what's happening over on the 15 minute, right? All of this movement here is all right here, right? So you might look at it and go, well, shit, look at all the great longs I'm missing. Yeah, you're going to miss some trades. Now, I'm saying, it's up to you if you want to take them, but I'm just telling you that you have to at least have an awareness that you're going counter to the higher time frame trade. So that might affect the size. Like if you're like, oh God, I can't not take this long. Well, size accordingly, knowing that you're going counter to the higher time frame. At no point did this ever, even though we had all of this bullish price action, at no point did we ever change the trend. That's all yesterday. It's been downtrend the whole time. So, right, then it's a question of, okay, can I live with letting some of those trades go? Because I have a method. I have a strict discipline to how I approach the market, which means I only trade in the direction of the higher time frame. Most people can't do that. The temptation's too great. Oh shit, I see it. Oh, it's perfect. Oh, I got to take that. I got to take that. I mean, review at the end of a week. If you want to really learn from it, look at how many times did you trade against the higher time frame and what was your success rate? Something to think about. Lots of potential trend shifts that happened in here, but that has stayed consistently the the key the key to it, which is all up here. There it is, way up there. Until we break that, this is all just down. We're just all just farting around down here in a downtrend. We have to break that. Now break that, right? And then now things open up. Very hard to do, right? It's really tempting to take all of this action here, especially when you see something like this, right? Now I'm not saying don't take it. I mean, you have to make that decision yourself, right? Do you want to take that? That's individual. You got to make that call yourself. But at least don't take it not knowing that you're going counter to the higher time frame. At least know that. That might affect your anticipation of what kind of target you have on that. I'm not saying you get out after 3, 4, 5 ticks, but at least have an awareness, right? At least consider your sizing, knowing that you're going counter trend. Let's go get all these off of here. That's why, it's again another good reason. One of the things that Irwin built into this, we have the 50, the 618, the 786, and the 887 are all built into that. So if I'm looking here now, okay, now we're look what we're doing right here. We're on the 1 minute. We know the 1 minute trend is down, but I also know that the 15-minute trend is down. So now, so look where I am, right? If anything, right? So where would my stop be? Right here. That's the strong high. So the risk reward here is pretty substantial, right? I mean, I'm risking $34 per contract, right? Or call it 64 ticks, right? I mean, 100 ticks is nothing in the MNQ, right? You're trying to let's do it. Let's do it this way. If that's your stop, can you get 3 to 1 there? I mean, if it breaks that, wait, that's a trend shift here, at least on the smaller time frame. It's not this one. It's not the big one. Let me draw that big one. It's not this one. That's where we change the trend. So right here, I mean, that's not a bad setup right there, actually, right? Because we're trading right into the IB, right? Where we know there's very thick, that's so thick with algos, you don't, it's a dangerous place to trade. But I look at the risk reward here is so favorable. Can I get a 3 to 1 there? I mean, that's the trade I would take. No, why do I say that? Well, here's the swing that produced the break of structure. We go up here. There's the break of structure. Now, what am I anticipating? Immediately, what am I looking for? Retrace. What's the target? The weak low. Where's the stop? Strong high. You got to be able to live with that risk. Well, I shouldn't say it that way, but that's a very reasonable risk reward, right? I can get 3 to 1 here, and I'm not even getting to the target. I'm just getting back to the open. Can I get that right? I mean, so perhaps when you put there's your 3 to 1 for your scalps, and maybe you let a runner go after the IB low. Why? Why would I even consider letting that happen? Because the trend is down on the higher time frame. Here's the weak low right here. That's a pretty fat target. It should make sense, right? So hopefully, right, we look in here, right? Where's the thing that makes this kind of tricky today is that this is all internal here. The last major market shift here, if I open this up, where's the last one? Is right here. There's the change of character. Now all of this is just all internal. Hadn't changed the trend. We're getting little micro trends, but the trend is unchanged, right? So we're just sitting here until that breaks. And that now you got to be one thing to watch for today. We've got volatility coming today. We got the Fed meeting here. Watch for a wick, right? Be careful of a wick going up there to sweep a bunch of liquidity because there's a bunch of liquidity up there. Look at all the fair value gaps in the order blocks here. So often you'll get a wick, right? And then that's why you don't want to trade these kind of things, right? You just want to let it happen, let the volatility come out of the market. But if anything, if you had any kind of a bias, it's here it is. There's the range. Right? That's what we're trading until one side breaks. Where's the better? And again, the idea of trading from the 50 or above or premium to discount is, I mean, again, think risk reward. Where do I have better risk reward? I don't want to be chasing down here, right? We've all made that mistake, right? Particularly in the indexes, when you see something move quickly, number one, do not react, right? Because that's what they're doing. That's why it's happening. You see a quick move. If you have any reaction, it should be to fade it, right? Because anytime you see something like that, unless there's major news behind it, it's just the algos, playing with retail. That's all that's happening. I want to emphasize again, here's the swing high, here's the swing low. This is all you're looking at in here is only relevant to what's happening within that low and that high. Right now, this is still an internal retracement. This is internal retracement until that breaks. Trend is down. So I'm looking only for shorts. It's annoying, right? It's like, oh shit, man, I want to look at all the good longs that were in there. But that will over time you'll be I think you'll be thankful that you're actually using that level of discipline. What happened here with these? An alternate let's just for fun, since how we doing here? We got 15 minutes. If that's too much, right? If you want to even slow it down, or you like to swing for bigger hits, which I think it's easy in when day trading, particularly if you're working on prop accounts. It's easy to get caught up in the little mini swings, like, oh, I made 100 ticks, right? I got a $50 trade there. I got a, but you know, and Irwin is the one who really influenced me on this, trading on a higher time frame. So if you want to go to something bigger, then you might let me get. I've got a 5 minute here. You might do a 4 hour and a 50 and a. I've got a five. I thought I had a 5 minute. A 4 hour and a 5 minute is not a bad combo as well. If you want more significant trades, now that's usually going to mean bigger risk. Let me change this to a 5 minute. Give me 1 second here to get all this off of here. And now let me bring in a 4 hour. Right, this is another combo that you might consider, right? Again, for those of you that want to focus on, okay, well, you know, for the first 2 hours, maybe the last hour, right, middle of the day, I would, you know, encourage you to consider avoiding that. Okay, now we go to the 4 hour here. Oh, we don't need that. Off of here. All right, so what's the 4 hour trend? Up. So what, right? I mean, well, wait a minute. 15-minute trend is down. 4 hour trend is up. What's the 5 minute trend? Down, right? So I'm not in alignment here. So you want to stick to, I mean, if it's 5 minute, 4 hour is your pair, you want to stick to that. If the 1 minute, 15 minute, you want to stick to that. So we can look here and say, okay, well, what's happening here? Do I have to even draw it? All right. So we're right into this imbalance here. Here's the little break and enter, right? We break this, retrace, but the trend is up. Let's do it from the other side, right? Just be mindful of where we are. All right, so we know this is going to be, oh, can I get that out of there? I may not be able to. Okay, so let me do it this way. All right, so here's the swing low, here's the high. Once again, right? So we got a clear target here. There's the liquidity that the algos will want to go after, right? And here's the little bait, right? They left this up here. That's an easy sweep. So to grab that liquidity there, you can see they swept it there, right? So where's the target up here? So until we do this, right? Right, right. If you're on the 4 5, right? If this is your combo, then the 4 hour is guiding you to only be looking for longs. Right. And now we're kind of like, well, wait a minute, we were just looking for shorts only. You got to pick a time frame. You don't necessarily want to wait until the 1 minute, the 5 minute, the 60 minute, and the 4 hour are all telling you the same thing. Although that wouldn't be a bad situation to be in, but it's not often that you're always going to find that. The thing we want to focus on here, if we're looking at the 4 hour, is that this is all that matters, right? Until this is broken, uptrend. This is the swing, right? This is the internal retracement. And when it starts retracing, literally, you're like, oh God, do you think it'll actually golden zone? What's more surprising is if it doesn't, right? I mean, that's the dominant algo in the market. I've been telling you that for 8 years. Okay, so you're looking for longs only. All right, well, if I come over here, where's my opportunity? Well, here's my strong low.
I'm gonna have to shower and then make some lunch.
Um,
Okay.
who's
Put that on.
who's somebody has to get muted. Steven had to get muted. All right, so over on this side, we're looking for longs only. I mean that is not that, right? This is just another one. So we look here, trend is up, trend is down. So I'm waiting now. I got to wait. Here's the strong high. Excuse me, the strong low. So I'm waiting because I'm in between. I've had, it's not surprising on a day like today that I have kind of chop, right? We're stuck. I mean, we're probably sitting right at the POC. Or excuse me, at VWAP. So what do I want to do when I'm stuck in a range like this? Well, the first thing I always want to do is draw the volume profile. Say, okay, well, where's the POC? Where's the support? Look what we do here, right? This is just the usual way the come here, market trades. We come into here, here's the POC. It happens to be, there's a low volume node here and the golden zone there. That's confluence. What are we looking for? Trend is up. I'm only looking for longs. Could I buy that there? I wouldn't because you don't have a liquidity sweep there. Right? That's the other thing we always want to look for as kind of a, well, let's do it this way, is kind of a tell. Come here. Was there a liquidity sweep beforehand? Particularly if you're going out to a little bit higher time frame like this. That's too ripe, right, for them to leave that. It's just waiting to be hung, or to be swept, right? So if we're gonna come down here and sweep this, well, now we're challenging the strong low. Here's the 50, here's the 618, right? Here's golden. So those are built into that. Here's the swing that we're trading. Here's the pattern that we always want to be looking for, internal retracement that goes external. Here's the retrace into a fair value gap. Are we going to break the low here? Well, then it's a question of, well, are we going to break the strong low? If we break that, now we have a change in trend, or pardon me, in this case, it would be confirmation of the trend. What would I be looking for? Retrace. Can we do this? Right. That's all it's swing, retrace, swing, retrace. Is it internal? Does it stay internal? I have an internal high and I have an internal low. Right. So the indicator is giving you the map the whole time. It's just whether you can follow it. Let me rephrase that. Whether you have the discipline to follow it. To follow it, I mean, a child could follow it. Do you have the discipline to follow it? Strong low, weak high, internal swings. Is there a trade here? Well, if I'm deferring to on the 5 minute, if I'm deferring to the 4 hour, I'm only looking for longs. Well, where's the key pivot for my longs? Right here. You could call this on a higher time frame, right? That's going to be an order block. So we're looking for some sort of a reaction here. And where do I have better risk reward? I mean, I put my stop right here, right? Can I get 3 to 1 here? Well, there's 3 to 1 up there. I'd be breaking the weak high. Where do I have better? Again, if it helps you, put this on the chart, right? Can I get that? What do I get? Well, there's a little over 2 to 1, 2.1 to 1. Better risk reward here. Why do I have conviction here? Because this is the pivot, right? Money had to be committed here to break the structure, right? Here's the change of character right there. So I got a micro change, then I got a change. Now that's not the full break of structure here, but it's enough, right? Well, that I should point that out. In the settings here, it's how many breaks of structure do you want to confirm the trend? You can set that to 2, right? And it's going to change everything. Little things that you can change in here based on your preference as you get more comfortable trading this. The other thing that you can change here is whether you want the changes of character to be confirmed with just a candle close, with just a candle wick or candle close. I started, right, when we first launched this product, I was on candle wick, but after much trading with this, I mean, there's never a damn trading. I don't have this open. I've now changed that to be candle close because there's too many liquidity sweeps, right? Where it'll just wick it, right? I don't really want that change of character there. I want that change of character when I get a candle close above it. So here, is that a trade to take? Well, I would say no, because you're in the middle of no man's land, and then considering the time and the day, right? Even if we draw all this and go, okay, well, here's the low end of value. So could I talk myself into a trade there? Well, gun to my head, it's certainly going to be a long. Low end of value, low volume node, pretty close. You're what do we got here? I've got the opening range high and the opening and the actual open here. I certainly wouldn't short it myself, right? What trend is up? I'm only looking for longs on the 5 minute. Where here's the little thing you got to watch for. Where's the liquidity? Right there. If they get that, where's the next bit of liquidity? Right down here. If they get that, where's the next bit? Right. So you gotta watch how far are they going to take this? Right, being algos, right? What are the algos looking for? Liquidity. Where's the liquidity? Well, there's the strong pivot right there. They break that one. I got another one here. There's an order block. I got the low here. This is all liquidity it can go for. Would you want to size that pretty heavily? No, I wouldn't. And actually, the way I would structure that, I would use our trade panel here. I'd want to take a break of that high, right? In anticipating, well, I got to clear all of this imbalance here, which has not been fully mitigated here. So this would be a scalp at best. At best, right? Maybe best case here, I can get up to the IB high, but this is not particularly attractive trade location. The only thing going for you here is I'm on the low end of value of what I've drawn here. I'm on the low end of the value area. And on a day like today, where it's just likely just going to be chop until we get to the Fed meeting here, I'd at least have statistically better odds buying the low end of value than I would trying to sell the low end of value. Because what if I sell this right here and it gets stopped out? Then you come back and you look at it and go, oh God, I'm such a dumbass. Why would I sell into the low of the right? If you don't know that it's there, but if it's staring, if you draw the volume profile and look here, well, I'm at the low end of value on a day without a trend. Do I want to sell that? Probably not. Probably not, right? So because what is the market doing, right? It's just going from value area high to value area low. That's all it's doing. And I'm still tied to my higher time frame trend. I'm only looking for longs. But that trade location and time of day are critical. I mean, Irwin is the first one who said, "Man, he early on he said, oh, I only trade till first 2 hours of the day, then I just turn it off." Which is a good way to approach it. That's where all the liquidity is. That's where you're going to get the volatility with a range, right? You try and trade in the middle of the day. Maybe you get something end of the day, right? If there's options expiring, that kind of thing. Maybe you can get that last hour, but it's really to 11:30. Europe's close. Take a break. I shouldn't. My suggestion, because I've been doing this for a long time, don't try and go bell to bell. It's not worth it. It's not worth the mental anguish of trying to go bell to bell. And you're trying to trade in the middle of the day when the market gets really squirrely, right? It can really just affect you psychologically. Stay where there's liquidity, where there's plenty of volatility. And today's not a great example of a day, but it's a good day to say, okay, what's my pair? Do you want to be 15-minute, 1 minute? You want to be 5-minute, 4 hour? And maybe you're 2 minute, 30 minute, right? I mean, find a pair that you stick with. But what you want to be careful of doing is going, oh, well, I don't like that the trend is up on the 4 hour, so I'm going to go to the 1 hour where the trend is down. Pick a pair, stay with them. Stay in sync with the higher time frame, and let the trades that even though go, God, it's perfect. You either have a system and a discipline or you don't. If you're taking shorts when the higher time frame is saying up, you don't have you're just making shit up as you go. Why even have the indicator on your chart if you're just going to wing it? The big value add of the market structure indicator is that it's giving you roadmap and rules. Sticking with them, that's what separates the winners from the losers. Now, if you follow the rules consistently and you're not making money, well, something's wrong, right? Something's wrong. Your size is wrong. Your risk is wrong. Stop placement's wrong. Or you need to switch pairs. Maybe you're better with a 15 1 minute. But if you did this try it for 2 weeks. 2 weeks. Pick a pair, only trade with the higher time frame. I'd be shocked. Let me know what your results are. I'd be really, really surprised if you don't see better results. Here's what you're absolutely going to see: fewer trades. Now, if you're in here for the dopamine hit, you're not going to like it. There'll be days when there just won't be a trade. You can always find a reason to take a trade. Always. There's no day that passes that you can't find a reason to take a trade. None, period. But is it consistent with, do you have a system? Do you have a method? Do you have a rule set? Do you have something you could write down on paper within, 4 or 5 sentences, say this is my trading approach. This is how I day trade the markets. If you can't do that, you're making shit up as you go, right? And you're going to be vulnerable to every little swing of the market, right? In that search for dopamine, right? It looks so good. Trying to still up, right? But see, so you can't look at that and go, you gotta be careful of this. Oh, well, shit, man. If I had just taken that short, look, I would have had a nice little scalp there. Yeah. Yeah, you would have. How about tomorrow? How about the next day, right? Are you going to find consistency with that? I would encourage you to think twice about that. Okay, do we have any other questions, Erwin? One last question off top. Do I need to use tick replay for range bars? Oh, that's for Erwin. So we'll look into this in the next webinar. Can this automate on ASP? Yeah, that seems to be a big request. We'll next week. Let's see. I'm not sure what we have on the schedule for next week, but that's one that we can dig into, Erwin. So anything else there? Can this indicator be automated with ASP? Right? I know ASP is very appealing. Um, the only other thing that I, I'm very consistent with this, that I would encourage you guys to consider if you haven't tried it, I would seriously encourage you to consider the auto trend line indicator. God, this thing has made me more money. This thing is so good, right? So you want to pay attention to this. This can be really helpful, especially if you're on the smaller time frames here, right? As we approach these, pay attention. And I've done videos on this before. What you'll often see is that when one breaks, so if you get a break here, right, the next target will be the next one. If you break up here, the next target will be the next one, right? The algos will respond that way. So for example, if I do show broken, you can really. Oh, I did a long video on this. I don't know, 6, 7 months ago. And you look at when they break, where do they go next, right? Well, here's another one here. That's the fifth time that's hit. So just here, right? So I'm breaking here. So in conjunction with the market structure, that's a break. Now I'm looking for the retrace. Break. All right. It's always your mind's eye. Everything you're looking at has to be this. Everything. That's all the market does. It's all it can do, right? We're in 2 dimension. Break. Now this can be, hard to. You can't keep that on all the time. But if you get a break, what I can see here is that if I break here, this is a good candidate here. Now trend is up on the higher time frame, so this is potentially, right? It would always just be potentially, it would be support. If we come down here, can we hold here? Well, if I break here, I got the IB right below it here. But this trend line's been tapped 5 times, right? So it's not like this is an insignificant, well, maybe there's a couple here. I mean, that's been hit 1, 2, 3, 4, 5 times. That's a trend line I'd want to pay attention to. Trend is down on the 5 minute, trend is up on the 4 hour. Disconnect. If you're disciplined, that means no trade until they get in alignment. Annoying. I know. It's frustrating. You just try it for 2 weeks. Just try it. See what the results look like. Keep in sync with whatever your higher time frame is. If I go back over here, are we still trend down? You want more action? You're going to get it over here. Is that what you want? Is more action? Is it more trades? Is that what you want? Look, now we're in sync. Well, let's let this reset. Look what's happening over here on this. I mean, oh God, this is a great example. Let's get this up, and then we'll wrap it up here. Okay, now we're on this. Well, here I'm on the 60 minute, right? So trend is down on the 60 minute, right? This can work also for the 1 minute. I always keep the 60 up. So here, oh, what a great. Like I can't script this shit. Okay, right. So here's what's significant. Number one, look how many times we hit that trend line. I'm telling you, it's worth. Jesus, I think this is even available for lease. If you don't have this, I would encourage you. Not that I'm here to pimp other indicators, but I would just encourage you to consider that. Okay, so here, what matters here? Here's the break, the first break of structure. Now remember, on the higher time frame, trend is down. So this is, oh, okay. Oh, I've got this swing. I'm anticipating next, since I've had a shift in market structure. I'm anticipating the retrace. Oh, well, here it comes. All right, here's the retrace. Oh, well, now what am I anticipating, right? I'm anticipating that I'm going to go off to break the high and get to a new high. Doesn't happen. What do I run into? Fair value gap and a bunch of trend line resistance. Okay, this is not. Right, now you might have taken the long here, right? Again, assuming it was in sync with your higher time frame, but we don't get it. What do I get? I get a structure shift. Now, if you took something in here long, you might have had a winning trade here, or maybe your stop was down here, you took a loser. But here's the setup. Oh, okay, that's significant. Now I've had a shift in market structure here that's negative, right? Now my higher time frame is negative. So what am I anticipating? What not what do I know? What am I anticipating? Retrace. Where's the better? Remember, this is now the swing. I want to wait until I get into the premium, right? I don't want to sell down here. I want to sell up here. Not because it's magic. Where's the better risk reward? My stop's going to be right here. I want to sell as close to that stop as I can, right? It's better. The risk is lower. The reward is higher. Break. Now, if you missed that one, oh shit, I missed that one. I was looking. What are we anticipating next? Retrace. Right? I mean, this happens until it changes, right? Until that happens, then I'm looking for this, right? The point I'm trying to make here, it's never the first swing you want. You're too late. You've already missed the trade. It's the retrace you want. Same thing here, right? Even though this was going the other direction, the retrace is what you want. You get up here, well, we ran into the IB, ran into some stuff here, and I don't know, whether you're trailing, if you're trailing behind the lows here, you probably had a winning trade there. Then down we go. Okay, shift in market structure. Okay, now it's got to be okay. Is that in sync with what I'm seeing over here on the higher time frame? In this case, it's the 60-minute, which the trend is up here, so it would be out of sync with that. The 60-minute. Okay, 60-minute, the trend is up. Okay, so this is questionable as to whether or not you want to take that because I thought I was looking at our trend was down, but now our trend is up. Okay, so I'm going to let these go here because the only trade here that was in sync was this one. Let's come here. Right to the 50, right to the opening range high. That was the only trade that was there if you're maintaining that discipline. Swing, retrace, right to the 50. It didn't get that. That was the target. Right. Look at all the resistance that was up here. Right now, again, it's easy in hindsight, but that fair value gap was there. Those trend lines were there. They're all there. There's the IB, right, which we know is the battleground. There is no level on the board more important than the IB high and low. Period, period, period. I don't care what anyone tells you. That is the most important level on the board. What happens there dictates likely the rest of the day. Okay, we don't get there. That's all happening over here. Trend is down. Oh, excuse me, trend is up. So now I got to wait. Where's the only time that I can take a long if I'm maintaining this discipline? I've got to break the strong high here, which would be a shift. Now we'd have one of these. I'd get this. If I break it, what am I anticipating? The retrace. Now I'm in sync with the higher time frame. What am I looking for? I'm looking for that because it's in sync with this, which happens to be in sync with this. Are you going to miss trades? Yeah, you're going to miss trades. The point, that's not the point. The point is to be profitable. A little less dopamine. Yeah. Can you wait? Right? You can just set an alert there. Okay, when it breaks here, I pay attention. Until that happens, I don't need to even look. I'll do something else. Once it breaks, I don't chase, right? That's if you right again, think premium discount. I don't want this. I want this. So I can get the discount. Better risk reward. Okay, that's probably enough. I've been repeating myself. Okay, I think I got everybody covered here. Any other questions here? One last question off topic. Do I need? Okay, so I think I got everyone. Okay, I think Erwin, he's off coding. All right, guys, we'll have this up recorded. Hopefully, you get a little something out of that. I would encourage you to just try it. Just try it for even for a week. Only trade direction of your higher time frame. See what the results are. Report back next week. Anyone who is here or anyone who watches this, I'd really be interested in hearing what your results look like. Okay, I guess we're out of here. Talk to you guys next time.